Good morning, good afternoon, wherever you are. This is Jeff Scott, and welcome to this week's edition of my top-down review. For those who got my email yesterday or last week to the Hgsi IO board, you probably could tell from the things I added to the beginning that I was very bullish. I felt guilty being bullish because so many people that I listened to afterwards were bearish, but it just looked like we were setting up for a run, and we did. Now the question is that run over, or did Jackson Hole kick off the Labor Day rally? Today is August 29th. My name is Jeffrey Scott, and my email address is hgsidoc@gmail.com. I've upgraded my mic, so hopefully the sound is better this week, and I changed some settings on my video capture program. Couple things. In the lower right-hand corner of your video, if you're watching this on YouTube, is a gear. You can click on it and change the resolution. I record this in 4K. Underneath, there's a place for remarks. If you like this, you don't like this, I think it's good just to put something there. I know people are watching. And thumbs up, thumbs down. I'll never get enough followers to get eBay to do anything that would help me to market this. Not that I do this for money or get paid for doing it, but I guess everybody has an ego, and I'd like to see my users go up. So on that note, let's get going. This is for educational purposes only. Anything I recommend is in the spirit of education and should not be considered investment advice. I'm a doctor, not a broker. It's funny, a lot of people that followed me early on were physicians who, like me, started by just following tips and not made any money. There's a way to do this that I think reduces risk and long-term is sustainable, and that's how I trade. I'm not affiliated with any software vendor or trading company. Tools I demonstrate are those I use in my daily trading, and I paid for all the tools I demonstrate. And trading involves risk, and you alone are solely responsible for any decisions you make. Okay. I retired for 2 years when I had a non-compete between 2013 and 2015. I'm retiring again in 2023 in January, and that will be it. During my first period of retirement, I decided to take the trading education a little bit more seriously, and I did some programs for some friends and others. I probably will consider doing that again. When I did my programs, I called it Be Your Own Guru. And what I did is, when I learned, is I found smart people: Ian Woodward, William O'Neill, Gil Morales, Chris Katcher, John Person, Sagar, Roy Kelly, George Lee, Van Tharp, so on and so forth. And I learned from them. But it turns out I'm not Mark Minervini, I'm not John Person, I'm not Roy Kelly, I'm Jeff Scott. And I trade the way that I trade. But if you take apart my trading approach, you can find bits and pieces of each of these and others that have influenced me. So be your own guru. I own lots of programs. There's a little change here. I put the wealth charts in. I think wealth charts is a really cool program. It is. It's still early in its evolution. I think it's been around for a couple of years. There's been a promised upgrade coming soon. The thing about wealth charts is there's so much in there. I play with it all day long, and it's kind of like Metastock in that a lot of other people are creating add-ons, so there's additional expenses. But if you just buy wealth charts, you get a charting platform, a fundamental, some scanning, screening. It's an interesting program. But don't buy it until the Wealth 365 event, which is coming up in, I think, October. Why? Because he charges like $297 a month all in for wealth charts and Fund Hunter, and typically does them both for $97 a month or $997 a year at the Wealth 365. Now, I'm not affiliated with them, he being Rob Hoffman, and I have no idea if he's going to offer the same deal. But the last program I was on, he offered that deal. So I almost bought it. Then I went to Wealth 365, and I was glad I did, because there was a considerable benefit to buying it at the program. Hgsi Edge Rater, Q, Dr. K, John Person's indicators, you'll find them on my charts. You'll see them as we go forward. I'm never paid by any vendor. If you buy something I suggest or use, it never hurts to say you heard it from me. because I like to call them and ask them to put stuff in their programs that you'll get to use as well. And I'm an unpaid volunteer, and this is just education. You'll see that when I get to looking at charts and what I affectionately call flicking through the market, my flickies, that I use HGSI. I use HGSI because the indicators I use are pre-built. I use HGSI because it's fast, and it's just a great place of storing information and building my watch list. Here's the website for it. Under free 30-day trial, you get a free 30-day trial, not even requiring a credit card. And down here, you'll see investing strategies. You'll see hundreds of videos by myself and others. So, broken record time. Every time it looks like we were rolling over. Go back a week, maybe Thursday a week ago. And then the market takes a leg up. Market feels like it's going to the moon and it's going to melt up, which frankly it sort of feels like right now, and it goes the opposite way. So until proven otherwise, we are in an uptrend with higher highs, certainly new highs this week on the spiders, the Nasdaq. The Russell had a great week, up 5% plus. But this pattern continues. It's just tilting upwards. And the thing about the stocks that I buy is they go up like rockets, but they fall like rocks. There have been some interesting discussions on the Northern California growth stock group, which is a very pure CanSlim audience, about whether CanSlim, why do all the CanSlim ETFs go out of business? Why is 50 FFTY underperformed? And I think back to the days of Ian, and Ian would create these calendars of when growth was in and growth was out. And growth, when it's in, it can be in for months at a time, and you can make a ton of money on growth stocks. But when growth is out of favor, you don't make money buying growth, or it's a lot harder to make money buying growth. And I think the story of CanSlim is when growth is in favor, CanSlim is a great way of making money. When growth is out of favor, it's hard to make money in growth when growth isn't working. Just my thought there. I'll probably comment on the board. If you look at IBD 50 versus Wilshire 5000 since the 50 came out, and the IBD 50 ETF FFTY is what I'm talking about, it underperforms significantly. But there are periods of time when it goes up just like a rocket. So we are in an uptrend. It feels like we're going to melt up here. Every time I think we're going up, this market teaches me a lesson, so I'm still being careful. And this has repeated this pattern on daily, weekly, monthly, and intraday charts. So since I feel like we're going up, you can believe I bought stocks this week. I sold puts on some of the big performers that I like to buy cheaper. Think CrowdStrike, even Facebook, even though I have a position. I started selling puts as it ran up, because if we pull back, I can buy it cheaper. And if it keeps going higher, I've got a big position already, and I'll get to put the premium in the bank. When the market starts to run like this, cover calls I've got in yellow, I start to spread them out more. I don't want to be called away. And bull put spreads, I have a hard time with those because it means I'm collecting premium and the stock can have a big run. But like I said, on Facebook, CrowdStrike, some of these high-priced stocks, it's not a bad strategy to put some money in your pocket. So I leaned a little bit over here to the left this week, although at the end of the week I did take some profits. And I also talked how I played support.com, which, boy, what a tough one to play, if I remember. Well, if you made money this week, congrats. Almost everybody did, I think, except for the shorts. Here's my sector map, starting here at materials, energy, financials, and industrials, and so on and so forth. It's a sea of green, except for, well, a little bit of healthcare. I mean, look at the REITs. You got 3 red, everything else is green. Communications, all green. It was a strong week, a very, very strong week. Financials, all green. And of course, it was capped by what was perceived, I think, as dovish comments by Chairman Powell of the Fed. Let's take a look in Thinkorswim at what I'm seeing going on right now. So make sure I'm in the daily charts. I made that mistake before, and then I start talking and it doesn't look like I think it's supposed to look. Maximize the sell. So here we have a year's worth of the S&P. And notice how it's tightening up here. This is kind of interesting. Little looser down here. This is a sign of a strong market. And also notice that it comes down and it touches the 50. And every time it touches the 50, what do you think you should be doing in this uptrend? You should be buying. And why was I bullish last week? 1, 2, 3, 4, 5. Because on Thursday it came down and just about touched the 50. So nice uptrend. Is it extended? Well, everything's extended. They've been running up so much. But we'll look at the linear regression charts in a bit. Bullish or bearish? Got to be bullish with the asterisk. At some point, everything stops going up. The Nasdaq futures, not as tight as the S&P, but look at this. What did it do? 1, 2, 3, 4, 5 last week on Thursday. It tagged the 50-day moving average and bounced. Again, why was I bullish last weekend? Forget the fundamentals. I was bullish because of the charts. And notice this little flag here, all-time high or new high for the year, which is an all-time high on the Nasdaq on Friday and on the S&P. We look at the Dow Futures. Dow Futures were up on the week. 1, 2, 3, 4, 5. This would have been the close on Friday, so they're definitely up. But they moved up on Monday and traded sideways the rest of the week. Notice, prior week, what did the Dow Futures do? They tagged the 50. All right? There were lots of reasons to be bullish. I never try and watch any other, quote, gurus. I'm no guru. I'm just a regular old Joe trader. I don't like to watch anybody else until after I do my video. And I watched all these videos afterwards of people being bearish. I have to play the charts. When I touch the 50 and bounce, I'm bullish. Dow sideways still continues. Russell had a great week. Look what it did on Friday. Wowzer. Powered by energy, nonetheless. 1, 2, 3, 4, 5. And what did it do last week? It didn't just hit the 50. It came down and it pegged the 200-day. I'm sure there was money on the sideline saying, gosh, golly, if I can just get down to the 200, I want to buy the 200. And it did. It stayed down below 200 for 24 hours. This is a very bullish looking chart to me as well. So bullish or bearish? Got to be bullish right now based upon the charts. The VIX ran up and came down very quickly. I got suckered in, lost a little bit of money on some VIX that I used as a hedge. Hedges are designed to lose money by me because if the hedge loses money, then it's a good chance the reason I bought the hedge went higher. So VIX is back down, not down to its low. And then if we look at the dollar came down. And what did I say last week? 1, 2, 3, 4, 5. I thought the dollar would come back down and this would support small cap growth. And it did. Great week for small cap growth. Now, if I flick this to the weeklies, not going to go into each individual, but you could see the runs we've had off of the March 23rd, 2020 lows. E-minis, Nasdaq, Dow. And notice even on the Dow, although it's lagging, its all-time high was the prior week. The Russell, which has been sideways, was this a important reversal? We shall see. I'll believe it and be really happy when it takes out the prior highs at 23.66. Maybe we see that this week. Wow, that would be amazing, wouldn't it? That's a big move, though. VIX weekly, and the dollar is back to baseline. And you could see that even though the dollar had a big run, it's still low in its pattern. Those that follow me know that the next thing I like to look at is the expected moves. And this was the week all about the Russell. The Russell, which has been a laggard for some time, was not the laggard this week at all. It was the leader. So I got daily futures, and let's just maximize sell. So we look at the S&P futures, and remember how these are formed. The distance between the white to the green or the white to the red would be what the market makers would charge you for a straddle at the money on the weekly future or weekly instrument. So let's say this is 50 points, and I'm just making that up. That means for 50 points or $50, you would buy a call and a put at the center line. If the stock moves more than 50 points in one direction, you make money. If the stock stays within the green and the red, you will lose money, and the closer to the white, the more you lose. If you're the market maker, you know that you've designed this so probably 80% of the time, the price stays between the green and the red, which means 80% of the time you collect some percentage of this and keep it. When it breaks above the green or the red, the market makers lose. We know the smartest people in the market are the market makers, and this is designed to not lose. So you look at the S&P futures, they traded up on Monday, sideways rest of the week, up again on Friday, closing right below the green. So the market makers did okay. They sort of a break even. The Nasdaq futures outperformed. Traded up Monday, Tuesday, sideways Wednesday. Thursday gave back some with that horrible attack in Kabul and Afghanistan and the Kabul airport. And then look at Friday, breaking through the top line. Now, that sets the center line here. Intraday, intra-week, when I see something trade below and then reverse, I usually look at that as a trading opportunity. We'll see what happens with this. Hopefully it continues to go higher since I'm long. If I look at the Dow futures, right in the middle of the top half of the expected move, what really outperformed was the Russell futures. Took out almost the entire expected move on Monday, traded above it Tuesday, back to the expected move, green line on Thursday, but look at where it closed on Friday. Wow, what a big move. Think about this. The prior Friday, it traded down here in the 31.08 range. No, I can't read, can I? If you saw my setup, you realize that the monitor is like 10 feet away. It's like 31 or 21.08. You see. Maybe I should use my big screen. I find it much better. Yeah, I was right the first time. And it traded all the way up here to 22.78. That is a massive move in 6 or 7 days. 5% on this week alone, the Russell, really outperforming. And the VIX stayed within the lower part of the expected move, as did the dollar. The other thing that I like to look at, and I introduced it to you last week, and I put it up there not because I haven't looked at it before, but because I give you enough charts. And I just wanted to show you why I was bullish. I was bullish because not only were we coming off the 50, we had pulled down to the linear regression channel line, and now we're just in the middle. So we clearly have more room to go. But I do keep in mind that this middle line has rejected the spiders in the past. If I look here, this is the Nasdaq, much higher ascent. We're in the lower half of it, still have room to go higher. And again, a beautiful bounce off the bottom of the regression line. Same thing here with the diamonds. Bounce off the regression line, getting up in the upper half. Still could go a little higher. The Russell didn't quite bounce off the bottom of their box, but on their way up. Imagine if we get a touch up at the top or even a breakout. Wow, that would be amazing for growth stocks. So I look at this. I don't see a clear signal here. It's really on reversal days when I get that touch that I get excited. Now I like to look at what's going on underneath the major indexes to sort of give me a clue as to what might be the way to play this market. 10-year, 30-year rates ticked up a little bit this week. I guess it's good that they're not down. I know this market's confusing. It doesn't like it when it's up. It doesn't like it when it's down. I think it likes it to get above this white line on both of these. And what I think it really wants, and tell me I didn't just give you, no, they're not the same thing. What I think it really wants is it doesn't want to see this. It doesn't want to see these massive, fast moves. It wants to see gradual changes over time. So raising rates are good for banks, insurers. Small caps. Here's a small cap, Russell in green. It's AD line in white. Notice both well below their prior highs, but they're trending up. Russell 1000 in whatever salmon color this is. White is the AD line, all-time highs. Nasdaq 100 back to all-time high on AD line and index. That's got to be bullish. And then you look here at the NYSE AD line, and again, like the small caps, it is well below its prior high. Lower lows, lower highs. We'll see if we can break through that with this. You can notice up here that the large cap ETFs all turned up, being spiders, diamonds, and Qs. The transports are down here, turned up, and the Russells trying to join the party here. And with rates ticking up, bonds tick down. Breadth. Stocks above the 40 moved, or the 200 moved up. Stocks above the 40 moved up, and stocks of the 12-week new high, new low moved up. Not yet in reversal territory, but at some point this market will get hot. Now, perhaps the biggest news flash. Have we started to unravel the divergence in the McClellan oscillator? Higher highs, and follow this line down. We now got higher highs, especially if this can move up higher this week on the daily McClellan. We still suck on the summation index, but it turned up. But we had a zero line reject and a higher high on the oscillator. Have we broken the divergences? That has been one of the overhangs to me on this market. On the weekly, similar story. We have broken that divergence. So, interesting stuff. Edge Rater shows me what a difference a week makes. Here we are, Thursday close. So this is Thursday close after the market reversed. 2/3 of the stocks, Thursday a week ago, the 19th. 2/3 of the stocks in the S&P 1500 were below the Bollinger Band, and over 14% were below the bands, 67% below the midline of the Bollinger Bands, and 14% plus below the bands themselves. Bearish. Here we are Friday, 12% above the band, 74% above the midline, bullish. Not quite excessive, but a major turnaround. No, Hindi's fired. In fact, even on the Nasdaq, the new lows disappeared and the new highs started going up. Exciting. Market tone, we had more kahunas. We had kahunas Friday last week, Monday this week, Tuesday, Wednesday, Thursday. Actually, Thursday and Friday. I think it was Friday and Monday, I'm sorry. And then again on Friday, we had some kahunas. The market tone is now more bullish. If I called it a climbing the wall of worry because all week long we were hearing about how Fed Chairman Powell is going to change the outcome of these markets. Notice that every number here is above zero. Everything was, for the most part, the markets were up this week. What I'm mapping here is ERG on the bottom versus gain. ERG is a combination of EPS rank, relative strength rank, and group rank. It's a determinant of growth. Now, I have very few stocks below here. So I usually cut it off at the head and cut it off at the tail. Actually, it looks like growth underperformed in a market where everything was moving. If I look down here, EPS rank did well, but stocks with no earnings did well. Relative strength did the best, but even stocks with poor relative strength did well, and group didn't seem to be correlated. In fact, stocks that were distributing the prior week, which were probably a lot of stocks that I own, really outperformed this week. So great week. The S&P 500's down here at 1.5% up. In green, you'll have here's my filtered buy list, of which 75% up, 5.61%. That's where I do most of my fishing from. My holdings going into the week were 4.27. My buy watch was up 4.1. I have this new scan that I'm playing with that looks for stocks that are in a long-term weekly bongo green, that have a short-term pullback and revert back to green and have a momentum indicator. 80% of that scan was up, average 2.38%. In yellow, you have the IBD 50 and the other Investor Business Daily lists. So what do you see here? You see growth outperform when you look at curated lists. So what a great week. Sector strength, everything's green or yellow, so it improved. In fact, if we look at, now just to tell you the difference, this is S&P 500. This, which is the Q tool, is the S&P 1500. Notice on Friday in the S&P 1500, all sectors were positive. All but one industry group or so were positive, and most stocks were positive. Over 5 days, you could see mostly green. Just tells you we had a really good week. Such a good week that even the 10-day, which was about 50-50, is now mostly green, and the 1 month is mostly green. Isn't it amazing how much a strong week in the market can actually do? If you look at performance, now, interesting down here, it says that one of the sectors was red. I don't know how that fits. That's 5 day. Okay. So 5 day, you had only utilities was down. On the 1 day, which is up here, everything was up. You can see energy, a 14% sector move on Friday. Holy Toledo. If we look at the intraday buckets, similar to what I already showed you, if we look at sector rotation, this is the hard thing about energy. Go back a year, leader, toilet. Popped its head up to leader, toilet, and now it's leader again. So it's all about news driven. You've got a hurricane in the Gulf that could hit, or may have hit this morning, at a category 4. See if I got news on that yet. I should have been looking at that, being that I live in Florida and I know the impact of a hurricane. It's funny, I'm not seeing a lot of news on it. I doubt it disappeared, so I suspect maybe that means it hasn't hit yet. God, I hope they do okay. Materials, financials up at the top. At the bottom, defensive, utilities and staples. Now, REITs can be defensive, and they're sort of in the middle. I then said, let's take the top 3 industry groups, or sectors, and let's look at what industry groups are in them. Here they are. Notice all these energies with the 140s, as well as some materials. I looked at the top stocks. This was the top stocks from the 3-star list of Sager. And I looked at some that I liked. Here is one. This is Dow. I guess it's a chemical stock. Big run up, pull back, reversing. Here's on the weekly. Here's the daily, running up a trend line. This could serve as some resistance here, but I usually ignore that when we're down so much. I like this. That's one on my list. Another one I liked was BCEI, which was a reversal on a oil exploration stock. Bonanza Creek Energy. Here's the weekly. Broke out above resistance on the daily. Here is a list of stocks that came out of Q Vital that are in the same industry group. Notice all of them were up on Friday, and some of the fundamentals are here. And this is an undervalued energy play. Canaries in the coal mine. This is different than Fang. You can see I have added some stocks to it here. The list is here. I know Google is bookings. Poised to break out is all I can say. Nice run up. Know your news and earnings. So if we look at the news, we've got some homes, PMI. So that's important. ADP employment. Thursday, we have jobless claims. And Friday, as John Person likes to call it, the monthly unemployment report. I don't see a lot of Fed stuff here. And we have a holiday weekend following that. But that's a lot of stuff, especially with the unemployment. And then we look at the earnings. Clearly slowing down, but we've got Zoom. Looking at things that I own, Anaplan I've looked at for this weekend, so now I'll punt it. Chewy, which has been down. OKTA, Asana, which has been a leader. Viva looks kind of ripe here, but earnings. Signet, which has been doing very well since coming off the bottom. So as you can see, a lot of things that you might own have earnings. It's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. So this week, or the following week, I played, I think, Upstart or 2 weeks ago on earnings, and I went long with a low-risk position and made some money. I did the same with Workday this week. Just like the chart. The S&P and Nasdaq set record highs every day except for Thursday. The bull market continues to be persistent to overlook concerns and attract buying. Both end of the week higher. The Dow Industrials had a gain of 1, which was lagging, while the Russell was up 5.1. Even prior to Powell, the market was showing buy the dip. Is Delta variant peaking, full approval for the vaccines, earnings beating expectations. If Taiwan Semiconductor can raise prices and they stick, so can others, which would be bullish for that group. PMIs show expansion, and Powell's sticking around. Market doesn't like indecision. Growth stocks really had a rally this week. I had probably one, if not my best, one of the best weeks of the year. 50 and the ARCs did well because of that, not because of me, but because of growth. Market sentiment seemed to pop into the end of the week, and perhaps it's setting up for a Labor Day rally. Although I am a believer that we go higher, I'm concerned that there still is risk later in the month of September for a significant correction. And I put more money to work last week, played a roller coaster, and also took some profits. Now, at the end, there are those that say to me, Jeff, the market's already got its gains for the year. It can't go any higher. Why don't you just get out and book your profits? And so I look at various Twitter feeds and stuff, and 2 people I followed commented on that, and I thought they were worth talking about. This is from Ryan Dietrich. This was on Twitter, I think on like the 25th or 26th, and said, big starts to a new year tend to resolve higher. Went back to 1954 and said, if the S&P 500 was up greater than 15% year to date at the end of the August in blue, how did the market do for the next 4 months? And you could see there's, I think, 14 times there, and twice it was below. So 12 out of 14, it was higher. And then from Chivaka Capital also tweeted and put out his wonderful weekly video, S&P 500 performance falling 15%. He basically took each of these dates and looked at 1, 2, 3, and 4 year. So the orange looks at 4-year return, which looks pretty darn good to me. And if you look 4 years out, 100% of the time the market's up, average of 43%. Well, that's 10% a year. Maybe that's average for the market. But a year out, only one really bad year, which was 87. 61 wasn't great. 2 years out, everything was positive, even after that market disaster in 1987. And if you look at the average 1 year return, you're looking about 10% per year. The average drawdowns were, when you take out 67, were not unreasonable either. So that gives credence to the bulls that want to stay long. All right. Well, I got through with that part in 33 minutes this time. That's an improvement. I cut out some of the extra charts. I'll put in extra charts to prove a point when I think the market's in a changing period of time. When they're not, when I don't see the need, I'm not going to put them there. So I do like to look at this. This is TradeStation, and I've got a number of indicators that I look at on the indices. It's like 6 different things. Number 1, am I in a John Person buy or sell? That's this green arrow, and I look at daily, weekly, and monthly. Number 2, is my bar green, blue, or red? Green I can buy or hold. Red I should short or hold. Blue I can do whatever I want. Green, that's bullish. Number 2, am I within the envelope? That's the third thing. That is yes, so that's bullish. Now I know that this thing can ride up the envelope, so it's not doom and gloom, but I've got room. Number 4, do I have any red dots sitting on top or green dots on the bottom, which would be bullish? Nope. Red dots even eased off on the weekly. These are evidence of divergence. That's 4 positives. Then I look down here at my high jump. I'm at 70%. I can get a little bit higher, but I know that we're getting stretched. We're not too stretched yet. I look at my weekly bongo, which is this middle green dot, which is green. And I say, the only thing I don't like on this is the Lugar RSI never flipped, but I'm not worrying about that. I look at the Nasdaq, I say, or excuse me, the S&P 500, and I say bullish. If I look at the Dow, very quickly, looks very similar, lower in its pattern. If I look at the Russell, this is the one that had the big move this week, right up to the top of its channel. That doesn't bother me. Even the Laguerre fell, nowhere close on the high jump. A new weekly buy signal. Boy, that looks good. And then lastly, the Nasdaq. Nasdaq's got the red dots. So where does that show up? From here to here, would you agree with me and we have a higher high? Sure you will. And from here to here, you have a lower high. From here to here to here, you have a lower high. So this is the MACD histogram. Higher highs, lower highs in the MACD. That's a divergence. That's a negative. And that's the one thing that bothers me on the NASDAQ. But it's been that way for a while. I like to see the dollar stay weak. And the dollar had, ran up. Wasn't this beautiful? Ran up to the top. I bet there's a sell signal in there. Yep. Had a Laguerre RSI and a person sell signal come in. Sold off at the midline in red. Notice that the dollar got to a high jump on the 20th, which would have been Friday, of 91.5. It was 100 on Thursday when the market reversed. Stuff works, man. When you get to that level, you get a reversal. This would cause the markets to go higher as it reversed, and we saw that. Cool. Then I open up Hgsi, and everything I show you in Hgsi that is not sitting in my user group is something that comes standard in the program. The user group is like a file cabinet. You put your own stuff there. But some of it comes with Ron Brown stuff for free, including the market analysis user groups. So I am going to open that up. I am going to hit Major Markets Plus. I'm going to hit my warehouse, and I'm going to open up here. Perfect. And this is going to list for me the 39 different market ETFs or indexes that'll give me a sense of how the market's doing. I'm going to put my top-down view, which is heavily weighted towards the 1 day, 5 days, and then 3 weeks. And it's mostly price. And let's just see what's leading. Make sure I'm ordering it by raw combo. Gas, mid caps, small caps, Fang, Russell 2000, Nasdaq's, interestingly, gold miners. 50. Here's an ARC Innovation, ARC Genomic Revolution, and IBD 50. Of course, growth was in flavor. That is a beautiful thing to look at if you're a growth guy. In fact, the S&P 500 is way down here. Let's take a look at the major market indexes if we can to start my analysis. All right, so it's a pseudo S&P 500 index. I think it's got to do with licensing fees, and it's a way of recreating it without having to pay extra money and not raising the price on the program. Lower left, upper right, very bullish. You have a mobile breakout here. Let's make this bigger so we see what's going on the right edge. You had a couple of kahunas last week, and on Monday, that looks bullish. Do I think it goes higher? Yeah, I think it goes higher. Eventually, it's not going to go higher, but right now, I got to be bullish on the S&P 500. If I want to look at the Dow Jones Industrial Average, right here, very sideways. Positive day, mobile breakup from a squeeze, weekly and daily Bongo are green, John Person buy signal, pocket pivot, bullish or bearish? Got to be bullish. All right, that could change at 9:31, but I'm bullish here. Russell 2000. Wowzer, breaking out above the 50. We have been below the 50 since the beginning or middle of July. And what starts off as support all along here became resistance, and now we broke above resistance. Extremely bullish move. If this was a stock, I'd be buying it. I'd like to see the weekly Bongo turn green. That'll probably happen this week. Big move up, mobile breakup from a squeeze and a person buy, pocket pivot, and a kahuna. Let me show you the other thing I like about this. I'm sure somebody else can see what I'm talking about. Here's the weekly going. We'll make this a weekly. Hold on, let me change this. Reversal here. I love this pattern. This is going down, and I don't want to do it in white, do I? That was stupid. Let's do it in black. Clearly heading down. Let's make it an arrow. Kill the last one. Man, is that, what am I doing here? Let's try this again. All right, clear that. Make it an arrow. Make it thick and make it red. So we got market going down and we got relative strength going, I did the wrong, up. Bullish convergence and a breakout. I like the market here. I hate to say that. Probably means we're at a top, but I think we got a run here. Beautiful. Labor Day rally right on cue. Let's look below the indexes. Oh, we didn't look at the Nasdaq, did we? Like the S&P breaking out. Let's look at some other things. How about Philly? I don't know why it's not doing this. I like it when I get it in alphabetical order. So it makes it easier for me to find stuff. How about if I do it this way? There we go. Philly Semiconductors. Breakout. We'll see if it can hold. That's interesting. Love to see that. How about the Nasdaq Biotech? I said it before. You need to know what's in your ETFs. I called for a bounce here. We got a bounce. IBB and Liabu do not have the exact same makeup. If you're heavy in Moderna, your ETF was down. So I know that IBB is heavy in Moderna. I guess this is the IBB. And LABU is less heavy in Moderna. And it looks totally, you can't see the big difference, but you can see the big move that LABU had here. All right, back here. Keep going. How about the Nifty 50? No, the IBD 50 ETF, which would be here. There's something going on with growth, baby. Weekly daily bongo squeeze, breakout of the 50 person kahunas. I like it. I like it. I like it. Why? Because my portfolio is very growth oriented. Now, we've got some lines to be thinking about here. So we just broke out of that. That's exciting. Be more exciting if it would stay when I stop. And then we got, let me do this one as a line. We're coming up to that resistance point. So, actually, I think I drew that bad. Let me try that again, and let's make it a little thinner. Oh, let's do it the way I want to do it the right way, Jeffrey. Now I want it to be a line. I want it to be thinner. I'll put my needle on it. I'll hold the shift sign down, and I'm going to do this. We are right at important resistance. A breakout above there, bet we can go retest old highs. We retest old highs, and you're a growth stock investor, you're going to make money. Something to watch. All right, what about Fang? I already said that I was liking Fang. I think I said it when I showed you my canaries. Fang also breaking above the 50. This is a more limited Fang. Let's look at RKK. That's something I know a lot of people like, which would be ARK Innovation, I believe. Hasn't broken out yet, but you're right below. Let's make this bigger. You clear your last, I don't want to call that, your 200, can't tell, you may have already cleared your chandelier stop. A break above this red line would be very bullish for me on RKK. And of course, if growth is working, you'd expect this thing to be working as well. Let's look at the dollar. We know the dollar was weak. We already said that. Let's just take a look at it. Make sure you pull up the bullish one if you want to show weakness. But it's pulled right back into support. So the dollar could certainly bounce, but we've got the daily bond went red, mobile breakdown, person sell signal, a pocket pivot to the downside, which may not be a real signal since Gil Morales doesn't use it, and a kahuna to the downside. The VIX, I'm not going to bother looking because it's just flat as a pancake. Gold, with a dollar weak, you expect gold to pop. And gold took out its 200. So gold looking a little chipper here. Even the weekly bondo changed. A mobile breakout, pocket pivot kahuna, it's in a person buy. Do you nibble gold here? Carefully, maybe. If we look at silver, it will be trailing. Still way down the pattern, hasn't taken out a chandelier stop. And what's disappointing, because a lot of us will play gold by buying gold miners. Gold miners don't look nearly as good as gold. So maybe we should be buying GLD or leverage some gold plays. All right, so now, then I go to F7 on the industries, hit my warehouse view, and you can see I've got 174 industry groups in HGSI. By the way, what I'm doing here of going from sector to industry groups to stocks is how I trade. It's a top-down way. There's no better program in the market for doing this navigation than HGSI. I'm going to rank using two-day force, and I see that I've got like 90 up, and I check this on other computers. When I look at two-day force down, I got nothing. Boy, was it a strong day. If I look at 5-day up, I still got mostly up, 87 up. 5-day down, I got a few. I've got 7 that still haven't flipped. Interestingly, I got biotech, large pharma, specialty apparel, things that are often growth in nature. All right, let's go to the two-day force up. Make sure I'm ranked by raw combo, which I am. Let's highlight the first one, which is application software. Right-click on the mouse brings this menu up. Left-click, change to index group. And let's look at the first one. Learned a lot on this stock. First thing is, it showed up on that dual bondo scan. So Friday, Thursday, Wednesday, Tuesday, Monday. So I bought stock on Monday. I'm out of the stock. I then traded the stock for a call spread, a 16-24 call spread. And then I'm thinking pre-market on Friday, man, I'm going to make a ton of money on that trade because I had a fair amount. Stock went to 60. You would think that a 16-24 call spread when the stock is 60 is worth $8. The call spread actually went down in value, which is just obscene. It just had to do with the high volatility of the out-of-the-money call. If the market closes above 24, my call spread is worth $8. Doesn't matter what volatility is when the option expires. But right now, that option is painful because I'm watching the underlying go nuts, and the stock is, the call spread is basically the same. Then when it got up to 56, I sold calls. Those have expired, or not expired, but those made me some money. And I bought a put spread. Same damn story. The stock has dropped from 56 down to about 30, and the put spread's worth the same as I paid for it. So as I basically have a put spread from 55, 45. I have a call spread left from 16 to 24, both of which are, by looking at the charts, very profitable, but because of pricing of options, have shown me why it's dangerous to play options in this. The option volatility just messes up the pricing. Now, I made a lot of money on my calls, and had I bought $16 calls, I would have been risking a lot more money than I did on my spreads. So it'll be interesting to see how this thing went. But what is the message here? Every time I see this pattern, what do I tell you to do? I tell you don't buy it, because it always comes back down. Even Moderna did it. And I sold my Moderna at the top in shorter calls. Lucky, maybe. Other thing is, because of the volatility in this move, and I guess this must have been a meme stock, a Reddit play. Because of the volatility that develops in that Reddit play, the options are so damn expensive, you almost have to buy spreads to participate. Then because you're buying a spread, And the same thing happened with Riot earlier and Mara. You feel great because you're selling your way out of the money call for a lot of money, but it takes forever for that spread to start to be worth money. Maybe next time I don't play these anymore. But that was support.com. I would leave it alone. It's going to bounce around, may even go higher. But right now it's just driven by the masses. I made a comment to my son. He goes, oh, so now you're playing those things. No, I'm not playing those things. When I saw it, if you go back here, it was a long-term base that was starting to break out. It was not a meme play. Let's look at the volume. Average volume is 15 million. 186, 156, 166 million shares traded on Friday. Yeah, bizarro. This is why this group is up top. Workday, I mentioned I played this one for earnings. Why? I don't know why I did it. Because HubSpot, Salesforce, and others in a similar business model did well on earnings. And because I figured that they would benefit from us not going back in the office. I also noticed that the market catcher had turned positive. We had broken above the last conditional change here. And so we had a bullish move into earnings. And I did a low risk spread. I made a few pennies. Not a big trade. Salesforce broke out on earnings. This thing has been dead going back to buying Slack in August-ish. But is this a big cup and is going to break out here? I kept a position on Salesforce for that very reason. So this group has been active. Another one that I'm out of now because it was a spread, and sometimes you get pissed you buy spreads. HubSpot had a great earnings run, broke out here on earnings and continues to go higher. Look at these moves, 92 at the bottom of the market to over 700. Even though I have a decent account, how many shares of a $600 stock can I buy? 1,000, 2,000? But I could buy 50 options, 50 calls. And if I bought 50 calls, it's still expensive. But if I sell 50 calls, it becomes an affordable trade. So on these expensive stocks, I have a tendency of trying to figure out what my target is and selling calls at my target and buying calls at the money. And you know, when the thing outperforms, they get called away, but you make money. All right, semiconductor devices, chain index group. AMD looks like it's ready to run again. Pretty impressive base here. Breakout, flag, and breaking out here, took out the PSAR dot, pocket pivot kahuna, and a mobile breakout. That new scan I'm working on, long-term weekly, bongo, so we know it's in a long-term uptrend. You look at the weekly, it's been in a long-term uptrend. Short-term bongo goes red, that says it's pulling back. Definitely pull back. Short-term bongo turns green, it means it moved back into an uptrend, short-term. So it's now pull back in an uptrend, reversing. And then 1, 2, 3, 4 momentum signals. This is what I look for. I like AMD. NVIDIA, I like this one too. This is when you buy it. You buy them off the 50. 1, 2, 3 kahunas in a row, multiple pocket pivots off the 50, mobile breakout from a squeeze. And oh, by the way, we had gone red and flipped back on the daily bongo. That's why I'm looking at this curve. Now, stocks in a good uptrend, this works for. It doesn't find stocks down here that are reversing because the weekly bongo probably would have turned red. But it finds stocks in long-term uptrends. Pixelworks. I don't know this stock from Adam. It's a cheap stock. Love the pattern, flag, breakout. No comments. I didn't study this. Micron. Needs DRAM prices to go higher. Doesn't look impressive yet. Broadcom, another stock in a sideways move. Is this one breaking out? It broke out above the PSAR and the chandelier stop, mobile breakout from a squeeze, flipped its bongos, person buy, pocket pivot, kahuna. Good fundamentals. It's just an expensive stock, hard to buy stock on this one. And we get down to the group. Top-down investor, I go through the top 10 every night, just like we're doing Amazon. Is it time for me to dump my puts and go all in? maybe. I'll give it another couple of days. I really think the market corrects some in September. I really do. I may be wrong. Maybe it's another 3 or 4%. Maybe it's another pullback to the 50 and another buying opportunity for year end. I'll probably wait until a couple of weeks and give up some of the gains here. Right now, my puts are so far in the money at 3,700. To extend them a week at a time, it's about $1. And it means that if Amazon was to fart its way down to 3,000 or go to 3,700, I'm pretty much flat. And it's helped me through this gap down. That's why I had the puts on. I don't know. I'll probably play some short-term call options before I get rid of my puts. So Amazon looks interesting here. And I'll tell you, seasonally, it's starting to look interesting as well. Here is the seasonality of Amazon. And you can see August, September performance, October is neutral, and then November and December performance. August and September are not necessarily bad months. And you could see that after maybe this pullback we just went through, we might see some strength coming in on Amazon. So we'll be seeing. I may get back in, which means get rid of my puts. But short term is probably playing with call spreads. Take-Hung, this is one of those NFT companies. I don't like the pattern. Netflix looks interesting here as well. Again, it's been in a sideways move forever. Just well might come right back into it. But it broke out of its sideways move this week. It's got some earnings coming in. Who doesn't have Netflix? That might be the problem because there's so much value by number of subscribers. But Netflix looks interesting here. And if Fang goes, Netflix is part of Fang. PDD is a Chinese stock, recover with some of the Chinese, still way down there. Hgsi also looks good, breaking out above multiple areas of potential resistance. Bongos turn green, multiple momentum indicators positive. It was also on that scan. JD below the 200. So I typically will go through the top 10. I'll go through a couple more. Newmont Mining was the only gold miner above its index performance. You saw gold miners weren't as good, but look at this. Here's why I might want to nibble at Newmont. Price down, relative strength up. Bullish convergence and a reversal. The fact that the Bongo Weekly is red, you're in a downtrend, and that's the problem. I don't like buying downtrends, but if I want to get into a gold miner, that looks interesting. Just look down a couple of these. Here's the index. Barracks also has the positive convergence. I like tech. I don't know why tech is here. I look at it more as an iron ore, zinc, and other, but regardless. Look at Techminco, or it used to be called Techminco. Now it's called Tech Resources. This was one of my best plays off the March 09 lows. Got memories. I remember sitting at a VectorVest meeting in Tampa, looking at my chops, because it was in February of 09, thinking back of how much money I lost in the correction. And some guy says, well, I'm buying all this Canadian company called Techminco, and the guy at VectorVest put it on the screen and said it's $4. It's a junk stock. Why would you do that? I looked at it and I said, what the hell? And I bought a shitload at around $4. It went up to 31. Didn't make up for all my losses, but it helped. So here you have a stock. It's been in a downtrend. So this is and Bob Meager, my scan partner, if you're watching this, here's a stock that I want to find. Problem is, its weekly bongo is red. So we got a weekly bongo. We're in a downtrend. We have a green daily bongo, so we have a short-term retracement up. Now, it's in a downtrend, so that means it should keep on going. But I also have a mobile breakout squeeze. I took out moving averages, chandelier stop, person buy, and a kahuna. I'm in Techminco. I bought it kind of 2 days before. I think Techminco goes higher. This is, when you see the red weekly bongo, it means you're in a downtrend. Next was exploration production. We know that must be good because of energy. Occidental Petroleum doesn't look that good, does it? I guess it's moved up off the bottom. Again, the weekly bongo's red, daily green, so downtrend with a retracement. Devon looks more like it's breaking out. Cabot down in its pattern. Range Resources taking out the 50. I like that. And just look at the earnings per share growth on these things. They love expensive oil. ConocoPhillips has a dividend, 3%. Like to buy it above the 50. That one looks like it's perking up. So I have a couple of these on my list for this week. We'll look at them in a minute. Medical devices, number 6. We'll just look at the ones above. Neurometrics. This looks like one of those meme plays. And now it's pulled back to the 50 and moving up. I have no problem playing this here. Bible gap up, mobile breakout from a squeeze. You just have to recognize that it's a high-risk play. It has almost no revenue, but somebody must like it. Not much earnings coming in either. You're buying a chart pattern. Hey, you take out that high from here, it's a big return. But it was as high as 24 and closed at 16. Just like support.com. And then Newegg, first of all, if George, you're watching this, this is a computer reseller, electronics reseller. I don't know why it's sitting in, well, it's e-commerce discretionary. I guess that's right. So why did it show up under medical devices, Newegg? You got the right stuff here. So there's something screwy that shouldn't be showing up here. But anyways, because it's not a medical device, I wasn't that interested in it. Now, a real medical device would be Medtronic, Stryker, Globus. This is interesting. Uptrend pullback breaking out there. So there might be stuff to like in there. Number 7 is electrical components. I don't know what this company does, Hgsi, but again, the run up, beam pattern, pullback, and starting to run again. A high risk play. Probably worth looking at these things and short-term trading them. I wouldn't be investing them. That was it. Amphenol, what a great move up. Too late. TE connectivity. Semiconductor manufacturers. Lot of beautiful charts here. Lam Research, clear the 50 here. Might be a good time to enter. Problem is, very expensive stock. Applied Materials, same pattern. Earnings per share growth is good. Taiwan Semiconductors, if they're actually able to pass on a price increase. ASML, a big market leader. How would you like to bid this? 192 to 800 since the bottom. Teradyne, getting ready. So a lot of these look interesting. KLA Tencor, they're expensive. My goodness. Specialty Pharma. Ascendus. It's a news story. You'd have to go figure that out yourself. TG Therapeutics have a bunch of new cancer drugs coming. I'm not sure how much of them are innovative versus Me Too's into good classes. Don't know much about them. It's not my account. But I know some smart people that just went to work there. I'm just right now in the mode of looking to see if there's anything I need to show you. And number 10, renewable energy. Plug Power. I've made money in this stock. I've lost money in this stock. Right now it's well below its major moving averages. I'm just watching it. This guy here, Solar Edge. I love the fundamentals. Probably a great story, especially infrastructure gets passed. Looks like it's thinking about breaking out. And then DQ is a similar Chinese play. Amazing fundamentals, but who cares if China shuts them down? No one knows what's going on with these stocks. I started nibbling this one just to see if I can make money on the rebound. It just seems like it's gotten chopped down in that mess. So, it's interesting. I'm very bullish in the market. I saw some interesting stocks, but so many things have already ran. Let's look at the things that I'm going to be watching as we start the week. So just a caveat, I'm going to put up my buy watch list. We talk about my biases. If I already own something and I don't want to buy any more of it, it's not going to be on my buy watch list, which is bad because maybe it's the best stock in the market, but I already own it. There may be things that look great that I've gotten burned on in the past, and I'm just an idiot and I don't put them on my buy watch list. That's their truth. So this is not a leaders list. This is not a best stocks in the market list. This is a group of stocks that look interesting that I'm going to limit my universe to, and at least at the open on Monday morning, I'm going to be looking at these as potential stocks to follow, and potentially if I want to open some new positions. So let's just look here. Aircraft parts, I don't know anything about that company. It just looked interesting on the Q charts. Application software, Perion and Variant both are breaking out of bases. Here's a green on the bongos, out of a squeeze, person buy, pocket pivots, Kahuna, Perion Network, makes money. Here's Variant Systems, also breaking out here. Dana in the automobile world, Dana Parts, Auto Parts. I'm just going to go through every one of them real quick. Again, pull back in an uptrend, in a longer uptrend, short-term pullback, breaking out, mobile breakout from a squeeze. I'd love to have it take out its chandelier. I may not wait. Person buy, pocket pivot, Kahuna, and guess what you have here? Just something that I like, which is price came down. Relative strength has improved. Whoops. AutoNation, not as exciting. I don't know why that got in there. I don't have a lot of financials, but I got a few banks. This is PNC. Actually, I got quite a few. Silvergate is more of a Riot, Mara Petroleum, MicroStrategy, Bitcoin play. Sonova Financial, mobile breakout from a squeeze. Kahuna, relative strength improving, breaking out. WAL, coming out of a base. Copper. I thought copper would be weak. I saw China was going to release some reserves. But like Techminco, breaking out above the 50 with some momentum. Good earnings per share growth. Dow, I talked about this in the beginning as a Q buy. Looks very interesting, like 4 kahunas in 6 days. That's also very impressive. Great earnings per share growth. Pays a 4% dividend. Boy, if the market corrects, would you like to be in a dividend payer with good earnings per share growth and one that's likely not going anywhere? Eastman Chemical, believe it or not, mobile breakout from a squeeze and a kahuna, breaking out. Westlake, got to get above that 200. Now we're looking at some biotech. These are all at your own risk. I don't know anything about these. I just like the chart. ARCT, looks like a stock that ran up on news, went sideways, and is getting ready to run again. Do your research. Immunogen, based upon chart, I might be nibbling here. Clearly, this is a stock that must have had some bad news. Pull down here is now broken above the 50. It's a cheap stock. Again, I'll probably do some research. It does have some revenue. Iveric Bio, don't know anything about them. Just a run up, sideways move, and looks like it's breaking out again, like the pattern. And Mersana is another kind of a bottom fisher biotech that just looks like it's reversing. PDS was one that I watched that looked like it was reversing, and it stair-stepped its way up from 2 to 14. So I keep watching it. I'll probably nibble on it. Gaming stocks look good this week. DraftKings, Penn, Caesar. This is Boyd breaking out above its moving averages. Stair-stepping up. Here's Penn National. I wish it was above the 200. I bought some of it on the buy signal. Why? Because when I see paint bar like this of kahunas, I get excited. Alliance data system, beautiful run up off the March bottom, a pullback, a couple weeks sideways, a break above here. I think it goes back up. I like it. A bunch of kahunas. Hgsi we looked at already. Netflix we looked at already. Spotgo we looked at already. Generac. You know, hindsight. I know some of you remember I gave this to you back here. God, it was right before it had a big run up. I gave it to you less than 100. And the next day it traded up and it hasn't looked back. And it's now above 400. It's from 100 to 400. And guess what? You got a hurricane hitting New Orleans. It's probably going higher. It's also helped by the fires. I hate to be making money off of misfortune, but the California fires, people are buying generators too. Disney, it's a streamer, been pulling back after a major uptrend because of positive news on their streaming. Who doesn't love Disney? Oh, did I just do that? I didn't mean to do that. Let me go. All right, I just must have closed it. Let's find it. Find it, Jeff. Find it. I mean, I got to close this one first. Let's see. So it had good streaming numbers. Reason why I like it is, well, you know why I like it. You're listening to me. Pull back to the moving average. When it takes out that chandelier, it gets interesting to me. And why do I like it? I like it because it had a pocket pivot, a kahuna. It's in a person buy, a mobile breakout from a squeeze coming out of a base. What's not to love? And look at the earnings per share growth. 2 and 3 times. It's multiple. Western Alliance, we looked at some of these banks. Westlink is a specialty pharmacy, a specialty chemical play. Weyerhaeuser is a forestry REIT. Will Scott is an industrial distributor. I'm going the wrong way. It's not. I don't think that's what I wanted to do it. Yeah, let me go back and look at it here. I want to look at it so that I'm going down the list. Here are some of the energy plays I like. They're similar pullback and now moving back up. This is Antero. And you'll get to know my temperature. My temperature is I like pullbacks more than breakouts. I like buying things off of the 50. I like squeezes. I like momentum. And I like earnings when I can get them. AR looks interesting. Canadian National Resources, similar. Cinerex, similar. Continental, maybe better because it's broken out. Diamondback, a little bit below. But I think in there's a couple ponies. United National Foods at the 50, mobile breakout from a squeeze. Don't know anything about this health services company. It's an IPO. Skip it. Pulte, home builders had some good numbers. Break here. Look at this, mobile breakout from a squeeze, sitting on the 50 in a person buy, pocket pivot kahuna. These are what I like to buy. But you're getting tired of me, aren't you? Will Scott, industrial. I'm getting tired. I'm just going to let you take a look at this. Shopify looks like it's interesting right here. Sitting a break above the chandelier stop, and I'd be buying more Shopify. Mobile breakout from a squeeze. Bondos are getting green. You're buying it right off the 50. This has been a major winner. And typically after it bases, it goes higher. Anything else here that I really wanted to point out? Shift 4 payments. A lot of the payment processors are doing well. And again, I like buying them on pullbacks. This was a little deep. A break above the 50, and this might become interesting. Great earnings per share growth. In the oil services patch, Champions looked interesting here, breaking above the 50. Mobile breakout from a squeeze, person buy, pocket pivot, kahuna. Man, there are weeks when I can't find any of those. And then you have weeks like this. There's my tech. Here was an interesting REIT. Urban Edge Properties, same pattern at the 50, clear the chandelier stop, mobile breakout from a squeeze, person, pocket pivot, kahuna. Just a lot of patterns that I like. I think on that note, we've looked at most of these. Some of these we've already reviewed. You could stop it if you want to take a list. No, I don't distribute a list because I'm not responsible for your trading. I'm just showing you how I look at the market. Now, if you're new to me, you're going, this guy is freaking nuts. How does he follow 71 stocks? Technology, my friend. Technology. I go into my sonar or radar screen and I build a list. That list has every one of the stocks I'm interested in. This list has about 600 stocks. And then when their signals hit, if I want to see stocks during the day that are reversing, upside, stocks that are breaking out or breaking down, bouncing, pullbacks and reversing, I can start finding stocks that look interesting. Here's one that has multiple signals. I can look at their charts. It's because that one didn't get the right chart. Let me put the pink on it. It must be the weekly pink. Let's see. Magenta. Magenta. I'm not going to worry now about why it's not switching the way it's supposed to switch. Sometimes it does that when I've got the recording on. But I can do it in radar screen. But Jeff, I don't have TradeStation. Fine. You got Thinkorswim, right? So in Thinkorswim, you put it in a market watch. And let's pull my buy stocks in. I haven't done this yet, so this is what I do. Buy watch. This was last week. Notice most of them went up. Go over here to import. Select file. It's hiding in here. So stocks I'm interested in buying. Hit OK. And this crap comes up because I got too many things. I must have a scan open. Nope. Here's my fancy scan. But here's a list of the stocks I'm interested in. And I can get rid of some of the other screens I have that have scanners on it. And I can be watching them intraday for the various momentum signals, the same signals in all the programs. So just to summarize, I'm bullish going into this week and into the Labor Day weekend. At some point, we're going to correct. Odds are we end up higher than we are now at the end of the year. Enjoy Labor Day rally. Hopefully we get one. Trade the market you see, not the one I think we have on Sunday. It's Monday morning that matters. Trade safe, and we'll see you next week. Bye, everybody. Sign